Hey traders, so now in this lesson, we're going to be talking about the Japanese candlestick, the anatomy of a Japanese candlestick, and how you can use them in your trading so you can make better trading decisions. So give us 2 seconds and we'll get stuck in. Amazing. So first of all, just so everybody understands, a Japanese candlestick is an indicator derived from price. Okay. Everybody talks about, oh, indicators this, indicators that. In my opinion, everything that we're using is an indicator. It's an indicator in showing what price is doing, where buyers are buying, where they're selling. But Japanese candlesticks are limited to a couple of things. And we're going to go through the very, very basics right now. But there's only so much information we have with a Japanese candlestick. Okay. So first of all, how a Japanese candlestick actually works. So you have a few different things that we need to highlight. Okay. You have a shadow, which is what somebody would call a wick. And those are the lines at the highs and the highs and the lows of a candle. And then you have the bodies of the candles as well. Now, the color doesn't really matter. Okay. The default and the kind of industry standard is for a buying candle, you would have one green, and for a selling candle, you will have one red. It doesn't really matter. All they are going to show is if price is going up, there's a certain open, and when price is going down, there's going to be a certain open with that as well. So let's take the example of a bullish buy candle. How a candle would start, it would start from the bottom and it will close at the top. Now, when it opens, it will again open from the area that it would close, on the level that it would close. So from here, you would see that the candle opened. Then it would close again from up here. And it could be anywhere within this range. But when it actually closes, then you would have the next candle that will open up here, so forth. Okay. Now, what are shadows? Now, shadows are basically wicks, and they just highlight the high of that candle on that specific time frame and the low of that candle in the specific time frame. So let's say if we're looking at this candle right here, and this is a 5-minute candle. Okay. This is a 5-minute candle. So each one of these candles is a 5-minute piece of information. Okay. Now within that 5 minutes, the candle can do so many different things. So let's say we've got this 5-minute is just closed. Now this candle has just opened. Okay. And ignore the wick right now. Ignore this part. But let's say the candle is just open. And now within 5 minutes, the candle is actually moving. It's moving up and it's moving down. Now, normally when a candle wants to move up, normally it has to have a retracement, because that is what we learn about in markets. You have market structure. And for a market to go up, first it needs to go down, make a low, and then continue to do a high. So what this candle has done, it's now opened. It's come down. Okay. It's found support. And now it started to push up. And now that's why you're going to start seeing that you have a wick here, because the opening of the body candle is here. It is now started to go. Let's say, for instance, it was coming down after the open, it would go red. And then when it starts to go back up, it will then go back to green. And that's when after 5 minutes, let's say 5 minutes is up, it closes right here. And then the next candle is going to open right here. And then it will do the same type of price movement. Okay. So that's that. Same thing with a bearish candle, but the opposite. So you have the open at the high and you have the close always at the low. Now, if this candle was moving and it suddenly pushed up, this would turn into a bullish candle. The open would stay there, and then the close will be at the top. Okay, but it's not. Okay. Once it's closed, then the next candle will move on, and you will continue the cycle until there is a change in structure or until there's a change in market sentiment. Okay. And that's the basic. All you need to know is these have an amount of time. If I didn't tell you this was a 5-minute chart or 5-minute candle, you could say this is a daily candle. Nobody really knows because the Japanese candlesticks have a very limited amount of price information. You have the open, the close, the high, the low. That's it, and the time. Now, with Japanese candlesticks, you have many different patterns that can give certain types of information to us. And these are some of the basics, okay? The doji, a long-legged doji, a cross doji, hammer, so on and so forth. You have a bullish opening, a bearish opening, a spinning top. These are very basics. You see them all the time in your trading. This would be, let's say, the one where it says a bullish opening, where it's just open straight away. There's no wick, and then the candle is just pushing up, eventually closing, and then the next one opening here. Okay, so something like that. Now, what we're going to do, we're going to jump over to a chart, and we're just going to go through many different charts and see if we can find some of these patterns, and then help us identify times where we should be getting in or should be getting out, or see what the candlesticks are actually telling us with the limited information that they have. Amazing. So now we are on a euro dollar chart, and we're on a daily time frame. Okay. So each candle we see is on a daily time frame. Now we're going to have a look at something very, very, very basic. And we're going to have a look at this candle right here, because this is quite an interesting candle. So you can see that price, we're in a bullish sentiment. So we had a bearish candle, which was a close. Then we had the open, which was right here, as we went through in our last slide. So we had the open there, and then the candle actually pushed up, closed, came back down, and then pushed up for another close up here. Okay. Now, if I do a replay of what happened on that day, we're going to go to a lower time frame. Let's say we're going to go to a 15-minute time frame. You can see this was the open. So that candle there was the open. As you can see here, price came down, creating that lower shadow. Then comes back over the open. So this would be our wick low. And I'm going to mark this out in orange. And now we're starting to push up. Now, as you can see, within that daily candle, even though that it was one large daily candle, within that you have many other fractal candles that are creating that daily candle. So with the 15-minute, you're seeing every candle here is a 15-minute candle. You're seeing a push, a close, an open, a close, so on and so forth. And it's creating that kind of stairway type of pattern. So we're going to keep going, and we're going to mark out just the highs and the lows until the next day is created. Now, in all of this, we're looking at what candles are showing us. At the moment, candles are showing us that price wants to push up higher. And we can see that by simply bullish market structure. Okay? Higher highs, higher lows, retracements on the highs, continuations. So this is all of these different things that we want to see. And then we had a really nice push up. Okay? This is at 1 o'clock. So price is still pushing up. Okay, now it's come back down. So we're going to mark this high because that's the highest point so far on the day. And then we've had the close. Okay, so that's the day finished from here to here. Okay, so during this bit of price action, we've had the open, which was here. We've had the candle come down, making the candle low, which was the shadow. Price has pushed up, making the high. And now it's come back down and eventually closing right here. So now if we go back onto a daily, what do we have? We have the high that we marked out, the low, sorry, that we marked out, and the high that we marked out here. And that is it. That is all it really does and all it really highlights. Candles are fractal. And what I mean by fractal is that they follow the same structure no matter what time frame that you're looking at. They follow the same patterns. Now we're going to talk about different types of patterns and where, when you see them, what can they actually indicate? Okay, so let's say you've got a level of horizontal support and resistance. So we've got the resistance level, we've got the candle, and we've got the wicks. The candle is opened, it's pushed up through the resistance level, and it's consolidating. It's going up and down, up and down, up and down. Now, towards the end of the 5-minute time frame, what we're seeing is it starts to come down like this. Now, what may that highlight to you? What that highlights to you is that prices come into a resistance level, found a lot of absorption of orders. We've had consolidation up here, and then we've had sellers take over and start pushing the market down. Now, for you, if you're in this position, you might be wary that, okay, maybe I should maybe close my position, maybe I should pull in my stops. You have to make a decision if you're going to hold the position, if you're going to, but that's what we would call, I think we could call that a shooting star. Let's say you have something like that, price is pushed up, it's come back down, a little bit like a shooting star. We will pull up in the other slide some of the different patterns, but that's what you may see. And it could be the same as you could see there, that kind of like a hammer pattern if this was the opposite direction as well. Let's say if we turn everything around, the market is coming down like this. We have the open, starts selling into a support level, but towards the end of the candle, it starts coming back up, causes that long shadow. And soon as it goes higher than the opening price, then that's turning into a buy candle and starts pushing up. Okay. Now, for you, if you're looking at this trade and you're still not in this trade, maybe you have now identified that this area could be a lot of trapped sellers. Traders, late traders within the trend may have looked, okay, now this level is broken. This macro level of support has been broken. I'm going to get in short from this area. Okay. And their stops could be above that high. So if you're looking at that saying, okay, we've got trap traders, we've probably got lots of buy stops up above this area, what am I going to do? I'm going to enter into a long trade, and you may go onto a lower time frame and you may get into a trade like this. Something as simple like that. And then price may go into your favor. So that's how you can start to make certain little trading decisions based off candles. Now let's have a look and see what the candles are showing us right now on a daily time frame. So at the moment, what we've got is we've had that. We've had price come down quite bearish onto a level. So we can have a look at this as a level of support. We've had trap traders. Okay, this week we could call them trap traders. All it is prices come down, found a load of buyers, closed up above the level. That's it. I call them trap traders because it just helps me focus. That's the pattern that I'm looking for. Now we can go on to a 1 hour time frame. And what have we got here? So we've got our trap traders that we've seen here. We've had a very interesting bullish candle with some follow through here. We've had then an open, a close here. This is all price action on one day. So this is a lovely green candle like this. This is a red candle like that. And now we've got a green candle. Actually, no, because this would be like this. Then you would have the wick. That's what it would look, because you've got the low, you've got this high. So that's what that would look like. And now we've got the open, and this is where we're currently sitting. Okay. So that's what we're currently looking on the 1 hour. Now, where's price going to go from here? At the moment, price looks extremely bullish. Okay, it's pushing up, it's broken some of these levels. We've had trap traders. So this just helps you identify where you're going. Now, I'm not going to go into too much now of entry models or anything like that, but just go through the markets and start to understand some of these different patterns that you would have seen on our last slide. If we go back onto the daily, what have we got here? That is basically what we've just laid out. We had a bullish candle, we had the high, the low, and then we had another bullish candle right there. And if we go on to our patterns, you have the doji, you have hammer, all of these different things. With the hammer, again, trap traders, price goes, finds support, pushes up, closes above the level. Maybe you want a continuation trade. If you're in the trade and you're seeing price push up like that, that's what you want to see. You want to see a lot of momentum, a lot of price coming, a lot of buyers coming in. So go through all of these different things and understand where you're seeing these in the chart, and it will help you identify certain types of setups and things like that. Now, that was very long-winded, but I hope that has given you some of the basics of candlesticks, and it may help you identify certain types of patterns that are occurring in the charts. And then it will be able to help you in later sessions when we actually talk about entry setups and certain types of patterns that can help us actually get in and out of trades. It will help you with those as well. So anyway, best of luck, traders, and we will see you in the next video.